Patrick, thank you for joining Equities here at the NASDAQ market site in Times Square.
Sylvia, it's a great honor to be on Equities with you.
Overstock.com has had a very rich history. You went public in 2002. In fact, you founded a few years prior in 1999. Tell us a little bit about some of the latest e-commerce trends, and as a well-known retailer, what has been happening in terms of your growth efforts?
Well, it has a rich history is a nice way to say it. We've had an exciting history. We're still here. We've been profitable. I think we first got profitable 6 or 7 years ago. We did it on a tiny fraction of the capital of everybody we fight against. We've been profitable. GAAP net income, none of this Wall Street, what do you guys, folks believe in here? This EBITDA or earnings before any expenses. No, we have GAAP net income profits. We consistently do that. We have slowed down. I think we're high single digits last year, and that's mostly a marketing mistake I made. But we've turning around, and I think we'll get growing a little bit faster, over the course of this year. I think I gave first time in history I gave guidance on the last quarterly conference call that you could expect that Wall Street, because we are in a bunch of transitions in our business, and we've already pretty hard for people to figure out. But I said that I think in the absence of, I think we'll make 40 million GAAP pre-tax net income, setting aside the cost of this T0 thing we're doing, which we're disclosing.
Which we'll definitely ask you about.
And any chance of systemic, for example, any chance of, this is system melting down, then I can't say 40 million. Yeah. Well, you'd be saying in 2008, I came out, we were doing very well in the middle of the year, and I said, we're going to make money. And then this thing happened in late 2008. And we lost 1%. And people said, you said you were going to make money in 2008. Well, there was a global financial. Anyway, setting that aside, I've told Wall Street we'll make, for the first time ever, I've said we'll make about 40 million.
And that's very encouraging. And one of the things that you're known very much for is for being a market disruptor. In 2014, you were one of the first, in fact, the first retailer to offer Bitcoin, or to accept, I should say, Bitcoin payments. Tell us a little bit about what drove that decision, and on average, what revenues are you seeing coming in from the Bitcoin currency?
Not much. It's really just a few $1 million a year. But the point of we took Bitcoin, we decided at the end of 2013. I don't think there was yet $1 million company taking Bitcoin, and we stepped up and took it, and we were like $1.3 billion, $1.4 billion at the time. What drove it was actually not Bitcoin. The main event of Bitcoin is not Bitcoin. I wish Wall Street would figure this. The main event of Bitcoin is the blockchain. And
tell us about that. There's a lot of confusion, so explain the differences.
Okay, well, the technology, there's this technology that was invented by some cryptographers that nobody even knows who it is. It was a white paper by a guy named Satoshi Nakamoto that he is not, it's a pseudonym. And he explained about 6 years ago in a white paper on the internet how you could build this technology that let there be trustless peer-to-peer exchange. And I'll explain in a moment what that is. When you apply this technology to money, you get things like Bitcoin, but you can apply it to all kinds of other things, like, say, Wall Street. And you could create a version of Wall Street that was immune from all kinds of mischief that it turns out has gone on here over the decades. You could apply it to central banking and come up with a version of banking and central banking and money creation that is much more transparent than the current system. You can apply this blockchain technology to a lot of things. Now the problem is when you talk about it, people confuse it with Bitcoin, and they say, well, Bitcoin, doesn't that mean, ecstasy dealers and gun runners and stuff? Last I checked, there were people dealing ecstasy and guns using US dollars. That doesn't make US dollars illegal. So, I mean, wrong. But anyway, set aside the Bitcoin, it's really all about this thing called blockchain. It's going to disrupt so many processes. I mean, the basic issue, a quick philosophical explanation, is for 6,000 years, humans have had this choice. Do we have consensual exchange, but I don't know if you can trust me, you don't know if you can trust back and forth, or we each just trust some central institution, like, say, a land titling office. We each just trust it. Say, civilization accumulated these centralized institutions like barnacles, and this technology has come along So for the first time in 6,000 years, humans can have peer-to-peer exchange where trust is not an issue. And that's why it's so disruptive. I think ultimately it's more disruptive than the internet itself.